Besant, the Treasury Secretary, has said we must monetize the assets on our balance sheet. The liquid asset is the 8,133 tons of gold, which probably exists in America. So if they monetize their gold to current market prices, it gives you revenue of $750 billion. Interesting thing that's going on in the East, as you know, the East has been draining the West of its gold reserves. But I'm piecing together a new international currency that could be linked to gold from the East. Cutting a long story short, Chinese exporters, mostly SOEs, have over 1 trillion US dollars on deposit in Hong Kong banks.
And there's the concept that adversaries of the United States are looking to de-dollarize. They have too much exposure to dollar-denominated debt, and so they're looking to pivot. And many of these central banks around the world are, in fact, choosing gold. But if you look closer, you'll find that it's United states as well. Municipalities within the United States, states deciding that they also need to de-dollarize, that their balance sheets are riddled with many times debt with negative real rates of inflation. Many times this is third world debt. Many times these are assets that are not benefiting the state. And so to the extent that the state has to invest funds in anything, we should be encouraging them to invest in gold and silver. In many cases, states aren't even allowed to do this. In many cases, because of prudent investor rules, because of permissible investment rules that are governed by the state and the state's financiers, the treasurers or state boards. Many times a state is not even allowed to invest in gold and silver if they wanted to. So there's also on top of mandating in some cases that states establish a physical gold reserve, another thing we're doing is simply empowering the treasurer to invest in the case that he or she wants to, as a protectant to the state, or for whatever reason, to chase capital gains, to hedge against inflation, to reduce drawdowns. For all of these reasons, gold makes a really interesting and useful part of its portfolio, and states themselves are starting to embrace that. There's plenty of chatter on the internet regarding whether or not the gold is there. And again, those questions are legitimate. But to me, the more interesting question is regarding who actually owns the gold. The gold might be there, but has it been swapped? Has it been leased, pledged, otherwise encumbered? Is it owned by the United States? Is it owned by the IMF, the Bank of International Settlements? Even the Vatican potentially has their hands in this. Germany, China, who actually owns the gold that is physically there? Another really important consideration on top of ownership and whether or not it's physically there is the fact that a lot of America's gold, these are coin bars. These are bars that are not liquid. They do not meet global standards for tradable gold. This is gold that was taken because America seized the gold holdings of Americans, and many of these coins were minted down into large bars. So they're not pure. They don't meet purity requirements, making them illiquid. So to the extent that America even has this gold, it can't even monetize it. It can't even sell it on the market the way a bullion bank would today. So another important part of this legislation moving forward has to be to include refinement of America's gold so as to make it meet market standards. These are changes that would come to a new iteration of the bill. And hopefully, thanks to all of the attention that is surrounding this issue today, we are hopeful that a new federal bill will be introduced here sooner rather than later on this issue.
Price targets are going to be hard to determine this time because I said the bubble is the biggest in history. When it breaks, the consequences will be bigger than other ones. And therefore, the dynamics and the monetary metals could be awesome. I've cited before, and people say, oh, he's predicting 8,000. No, I simply said that over 50 years, gold has had two prior bull markets, each of which were eightfold moves from bear low to bull high, different span of time. One was 3.5-year process, mid 76 to 1980. One was from 2000 to 2011, 11-year process, but both were eightfold moves. Well, an eightfold move for us now would be $8,000 plus, just to match the ratio moves of those two prior markets. And the conditions that drove gold up then were hardly as dynamic under the surface as they are right now. So if gold went way past 8,000 and went to 20,000, it wouldn't shock me. I cannot come up with technical swing objective targets on the upside, except to note what has happened over the last 50 years is two eightfold moves under conditions that are hardly as dynamic as what we're sitting on right now. So, and also another thing, a point I make is I don't think the next, quote, top in gold, wherever it may be, next year or so probably, is going to be a top as we normally think of one. I think it's simply going to be a new price level reality. Not going to collapse back to $500 an ounce or anything like that. I think the world will go to gold because the financial crisis that follows the stock market bubble breakage will cause rethinking of many things. Rethinking of the validity of the intellectual viability of central banks, for example, and a move back to gold standard currencies.
I do think we're starting to see, I don't know if you've interviewed Rick Rule, but one of his famous things, the long-term global mean allocation to gold, mean as an average, not mean as in nasty, is around 2%. But recently it's been 0.5% because gold has been so unloved until recently. And so you don't have to have everybody, stacking gold bars in a bunker in Idaho to move the market. You just have to have a reversion to mean. If people, as you're saying, start worrying about, financial disturbances, global trade wars, hot wars, there are plenty of reasons to start saying, you know what, in this world, maybe I could hedge a little bit with some gold in my portfolio. And all we have to do is have a reversion to mean, and that would quadruple the investment demand for gold from 0.5% to 2%. And I think, well, it's a different world. Maybe it won't go back to the global mean. But you know what? If it just goes back to 1%, if people around the world just start thinking, 1%, that's not a wacky number, and a little bit of this, quaint, archaic pet rock, maybe it'll help me out someday. That would double the investment demand for gold to just go from 0.5% to 1%. So, and I do see evidence of that happening. We just saw, the soft data, this is the big distinction, we're hearing about in the media now. The soft data looks really scary, but the hard data hasn't budged yet. So the soft data is that I hear more and more of the financial talking heads mentioning gold.
Gold will not make you rich overnight, but it might stop you from becoming poor over time. It won't yield like a bond, but it also won't default or devalue or get debanked. You will not impress your friends at dinner parties, but it might just help you keep your dignity when the next crisis arrives. So no, you're not too late to profit from gold. You might actually be one of the lucky ones because you are one of the ones that is waking up just in time. So what do you think? Let us know in the comments below, hit subscribe, and let's keep the conversation going.